The new Canadian mortgage rules. Let's just maybe take a couple minutes to talk about what the new rules are that CMHC has set out, and maybe a little bit on maybe why and how it's going to affect us. So first of all, let's go back to 2008, which really wasn't that long ago. They made some rules, I think it was October 15th, and what those were was you were no longer to have a 40-year amortization. That's fine. The longest we can have is a 35. Most of our parents were always used to a 25 anyway, so we're kind of spoiled on that. Also, they took away the no money down mortgage. Exactly, you have to have at least a down payment. Once again, we were spoiled for a while, and that's taken away. I don't mind that. The third one, not even many brokers even pay attention to, and it's the one that scares me the most, is the minimum credit score. It used to be 580, and even some exceptions lower. Now the minimum is 620, and even for discounted rates, they're holding it against us. They want to start seeing some 680 beacon scores. So make sure to look up my video, how to maintain a high credit score, and take advantage of that, because you never want to be making all your payments on time and find out you still don't have a high credit score. So please watch those tips. Now that was back in 2008. Now for April 19th, 2010, there's some new rules. First of all, just last week, they kicked in the Business for Self program. It's very, there's a fine line there between a 2-year and a 3-year if you're business for self. So make sure to contact your broker or contact me at themortgageteacher.ca and pre-educate yourself as much as you can if you're business for self. So I can help you ask a lot of questions and help you give you your answers. But the ultimate goal there is to have 20% down, and that's going to help you out a lot. Okay. Now for the April 19th changes. Okay. First of all, a lot of us are very good at refinancing up to 95%. So leaving 5% equity in our house. A good example of this, I buy a house for, $250,000. I go take a line of credit for 20 grand, finish my basement, add the deck, do some landscape. I mean, the house goes up in value in these new subdivisions. Then we want to refinance because our house went up in value and go and pay out that line of credit and focus on paying down that mortgage. Where we could be caught now is you can only refinance up to 90%. So that's 10% equity you're going to have in the house. Now, here's the question. Why did the government make that move? I have a feeling, folks, in Canada we could be looking at a deflation period. So if you perhaps bought your house at $260, we could be seeing it worth and selling down the road for $250. Why else would they make this change? Well, it was only 3 or 4 years ago you could refinance up to 100%. And the reason for that is because if you didn't make your payments and the bank took over your house, the market was so hot they could probably sell it for more than you even paid for it. So there was no risk. Now there's risk. Okay? Now, the second rule of thumb is on rental properties. This only affects people in the income property business, okay? Before, you're allowed to be spoiled and only put 5% down on a rental property. Now you need to put 20% down. This isn't necessarily a bad thing. I do really like this move. The reason being is because the right people are going to be in the rental business. Right now, we see a lot of people stretched too thin. They don't really have the money to support the house if there's no renters. So what happens is they didn't put any money down on the rental property. They have the amortization stretched out, and they still need somebody living there to even pay for it. So the problem is they've hiked up the rent. So we seem to find, I just had a single mom call me the other day. She has problems because she can't find a place to rent. Places that she thought should be worth, here in London anyway, worth $950 or worth more $1,200. So this is a good move on CMHC's part. Make the right people with the money get in the income property business. So you need 20% down. On another positive note, that does save you on the CMHC cost. So in the long run, it can save you a lot of money too. Now here's one I never really thought of. And I don't know how many brokers or even banks, no offense, but I don't really think they're talking about this at all. Here's the one that scares me. And please listen up and pass this forward. Before, when you qualified for a variable, so a variable is as low as 1.85% now, which is the spring of 2010. I used to be able to put a qualifying rate. So there's a certain rate I put in to make sure your ratios work. If you're familiar with this, it's that 32% and 40% thing compared to your income. I used to be able to put a 3-year floor rate. So usually a bank offers you a posted rate. when you go to a broker, they start educating you on what the floor rates are, the lower rates, okay? So I used to be able to put a 3-year floor rate. Well, the CMHC has made the rule change that to qualify for 1.8%, I have to put in a 5-year rate. As we all know, a 5-year is usually higher than a 3-year. The funny thing with this is we're not quite sure yet, so I have an ear. Is it the 5-year discounted or the 5-year posted? Go to your common TD website, look at the mortgage rates, you'll see posted rates. So that's TD's posted rate. And I see some at 5.79%, some even as high as 5.99% or 6%. So if I'm hearing this right, in order for you to qualify for a 2% variable, you may have to put in 6% and make sure your numbers work. And this is why it scares me. Because if you were pre-approved a month ago, let's say March 2010 for $300,000, you may only be pre-approved now for, as low as $220,000. So definitely it's worth giving me a shout at themortgageteacher.ca. See where you fit. Please use my mortgage teacher on Facebook, Twitter, and this YouTube channel to stay up to date. I promise you I'll keep these video blogs up to try to keep it down in layman's terms. And these are all so you can pass these links forward from this YouTube channel so your friends, family, and people you care about can keep up to date and make sure we don't lose out on anything, okay? So be sure to look me up and we'll go from there, and all the best. I hope this helped. Take care.